Good teamwork there.
Ah,
Had a little trouble with that last time. Thank you.
All right.
this one gives me the option to leave the meeting now. I'll stay.
Is there a motion to approve the agenda? Peggy has moved. Is there a second? Lisa seconds. Any further discussion? Hearing none, all in favor, please raise your hand. Or say aye, Gio, whatever works for you. Abstentions or opposed, abstentions. Agenda is approved. Wow, I'm out of the groove here. The next order of business is public comment. I know that Chad is here as to assist us with the audit, but do you have any public comments for us? All right, hearing none. The next item is approval of the August 24th minutes. I would welcome a motion. Lisa moved approval of the minutes. Is there a second? Zach seconded. Is there any discussion? Seeing no signs of discussion, all those in favor of approving the minutes, please say aye.
Aye.
Yep, great. Opposed? Abstentions? You have approved the minutes. All right, the next item of business is a review of the audit. I'm going to mute myself and turn it over to Chad.
All right, thanks, Tracy. Gio, all set? So I think I've met most of you before from last year. My name is Chad Hewitt. I'm one of the partners at Sullivan Powers and Company, and we've been in high audit for many years, and we kind of all rotate around as far as our partners go. I've been involved with VI audit different ways, different segments for years. And also involved with the VSBIT audit as well. So, but here we are about VI, and I was just telling Chris that, or Chris, that you guys are probably gonna think I'm a broken record because a lot of what I'm gonna say is the same thing as I have the last several years. So, first of all, I think you all have the audit, you all have the management audit in front of you. So. Before I start, does anyone have any questions that I should answer ahead of time to alleviate any concerns at first, or should I just jump right in?
I would say jump in.
All right, jump in. Okay, all right. So I'm going to turn to pages 1 and 2 of the audit. These are the only 2 pages that are actually mine in this audit report. This is basically me giving an opinion on the financial statements of VHI's books. Everything else beyond this is VHI's financial statements. It's all about VHI, and but the opinion here that's given is the same as it has been for many years. It's unqualified. As you all know, you cannot get any better than unqualified. I mean, we have no journal entries, so if there is a A++, we'd like to give you that. But there's, again, unqualified is the best that you can get for an audit. And so what we're saying here is that there's no material errors at all. But in our opinion, we've gone through these numbers left and right, and they're very solidified, and there's no question about them at all. So those are pages 1 and 2. And again, these are my pages. Everything else is VHI's, and pages 3 through 7 is what I call it, just a very integral part of the audit. And again, what this is called is the management's discussion and analysis. And what these 5 pages, what these 5 pages do is basically summarize the financial activity of VHI in a very narrative form, layman's terms. So you're not reading the other 35 pages of my audit report. It all hits highlights. It hits the big picture things. It tells total assets, total liabilities. It doesn't give as much detail, but it's obviously the document was created by Chris and reviewed and approved by Jonathan. And Bobby Joe, and basically just really a layman's terms about the audit. And a lot of times I'll just tell people, you know what, read the MD&A, because that's where you get your highlights. That's where you get your main functions. So I would definitely spend some time with this. And again, this is obviously I reviewed it. These pages are considered unaudited because it's management's. All the numbers are based on my audit, but it's management's opinions about how the things went and how it actually talks about the future. It talks about what's going to be happening, like with subsequent events and different economic factors. So a great document that I just, again, if you guys want to read any of it, this would be the part you'd want to read. So starting at page 8, it's called a statement of net position. We've also known this as the balance sheet for many years. Just in the new world of accounting, they like to change the names every so often, which is crazy. But statement of net position, and really you'll see that the biggest focus is looking down at the bottom. You'll see a net position, and again the names are synonymous: net position, retained earnings, fund balance. We've used these terms all the same before, but they're all synonymous. But net position, it's just your difference between your assets and liabilities. Ended the year with about $44.8 million. And if you look to the right, you'll see last year in 2020, you ended with $44.2 million. So basically a $550,000, $600,000 increase over the prior year, which is basically, you really can't get any better than that. You guys, with a goal of trying to break even every year, I mean, to making only $500,000 on $298,000 of revenues is pretty incredible. Breaking it down, going back upwards to the asset section, you'll see that your assets changed year over year, really by about $2 million. Some went up, some went down. The one thing that might look a little odd this year, and again, it's all timing, is you're saying, hey, we ended the year with zero cash. And then if you look down at the liability section, you see a cash overdraft. And all that is just timing. That is some checks going out the door on June 30th, whereas money wasn't swept in from the investment account on that day. It was swept in on July 1st. So technically you had a slim chance if somehow these checks all got cashed within a split second of time, but you weren't going to bounce checks. But that's really what it was. It's all timing. But again, that's why you'll see the cash overdraft section in the liability section. But at the end of the day, assets. I mean, the cash. Like I said, that had a variance, but your investments went up slightly, $1.5 million. Certain receivables went down. Certain other prepaids they all just moved a little bit. Nothing too dramatic. On the liability side, again, you have accounts payable, which is your normal operating vendors, which is very standard. Your assessments payable, where you're paying the government in the state of Vermont based on your claims. Again, those are uncontrolled expenses that you have. But what you owed at the end of the year was up slightly, not a big change. Your unearned revenue from this year to last year was actually up about $550,000. The reason being is that at the end of 2020, you guys, because of COVID, gave the reprieve of not billing July dental premiums. So as of the end of 2020, the only unearned or the only pre-payments that you guys got were for some health premiums. In 2021, not the case. You actually did get some health premiums and some dental premiums in advance. So that's kind of why there's a variance there for unearned premiums. Claims payable, actually, again, it's all timing, but the claims payable, those are the payments that Blue Cross actually paid right at the tail end of the year, but you guys hadn't reimbursed them for. So all timing of them paying the bills. And then the wild card is the claims to be paid. And that's where you guys have contracted with Blue Cross and their actuaries to basically get out their crystal ball and say, hey, based on history, based on trends, market analysis, everything, what are we going to, after all the claims sugar off at the end of the year, what do we still have coming down the pipeline for bills? And their actuaries estimated about just shy of, $10.9 million compared to 9.6 of the prior year. So that is up slightly. But again, it's all actuarial based that we rely on. So So that is basically balance sheet. Assets minus liabilities and ending up with net position. Again, net position did not change hardly at all from one year to the next. So turning the page to Exhibit B, it's called the Statement of Revenues, Expenses, and Change in Net Position, otherwise known as your income statement or your profit loss statement. Again, just the nonprofit term here. We have a 2021 to 2020 comparison. Top section, revenues. You'll see that your revenues were actually up about $26 million over the prior year. And you'll see that dental contributions are down slightly. And again, that's down just about $550,000, which is 1 month's billing. We did not have a July 2020 billing for the dental. So dental would have been pretty much dead on if that reprieve, 1 month reprieve wasn't given. Health insurance is basically the biggest increase. Coming down to the middle section, your operating expenses. Where did you spend your money? And the first line is health claims. And you'll see that is up about $28 million over the prior year. And again, it's whether or not, I know we talked to Chris and John, whether or not people are finally catching up, going to the doctors after the COVID, the pandemic, and finally playing catch up. I know Chris and I, and even Bob Joe, have had the conversations about what the pandemic is going to do to these claims, whether or not these people delaying going to the doctors, what effect it's going to have on future claims, and it's kind of unknown right now, but it's something that's definitely out there. So other line items of expenses, reinsurance, again, just protecting yourself from the specifics of specific claims. The capitation, the assessment, the assessments that we talked about, those things are obviously out of your control, and then the program administration that you pay Blue Cross, and you also pay Delta Dental, and then the last two things is basically your general administrative expenses to run the program and the wellness program, which is obviously a huge part of VHI. I mean, it's actually down a little bit this year, but it's a considerable size of the budget. And obviously from my understanding is, I know we can talk about this later, but with the Visters partially leaving, or part of their group leaving, but them wanting to retain being part of the wellness program, I think obviously says a lot for that program. So that was a $2.2 million, but right in the middle, you'll see a line on operating income expenses. So basically the difference between your operating revenues, your basically your premiums less your expenses, you guys are actually lost about $2.1 million this year. And based on the fact that claims are up, that actually seemed reasonable. But the good news is, the next line down, investment income. I mean, your reserves in the stock market took off. You actually had $2.7 million of investment income, and that investment income obviously wiped out the $2.1 million operating loss. And so therefore, that is actually how you actually created the $590,000, I call it $600,000 increase in your net position, your fund balance for the year. So actually worked out very well. I mean, again, if you had to plan that, like I said, on $297 million of revenue to only sugar it off to only have a $600,000 gain, is actually, it's pretty incredible percentage wise. So third page, Exhibit C, it's called a cash flow statement. This basically shows how you derive your cash, money in, money out. Obviously, it's a lot of big numbers, but I mean, it's all really from operations. You guys didn't, your cash position, actually, as I mentioned on the balance sheet, you started off having about $500,000 in the bank, and at the end of the year, and again, I'm only talking cash, not investments here. So you started off having $500,000 in cash. You actually ended up about 1.2 in the hole. So it's a $1.7 million difference. But again, a lot of that is timing, and the fact is, if we waited a day longer, you'd see that as a big decrease in investments right on July 1st, because that's how our cash was funded. During this year, investments we only pulled out $812,000 out of our investments. So we set it there and let it grow. So, but it's truly just a cash flow statement. It just shows the ups and downs of what causes it. As receivables go up, that doesn't provide cash to us because we're owed money. But as receivables go down, people are paying us money, and that actually provides us cash. And it works just the opposite. As our payables or as our liabilities go down, we're spending cash. But as our liabilities go up, it goes the other way. As our liabilities go up, hey, we got more money in the bank because we're not paying things out. So the cash flow statement, that's really what it describes. Pages 11 through 20. These are the footnotes of the audit, and the only purpose of these is to give more detail about each individual account on the balance sheet and some of the liability of the balance sheet and some of the items on the income statement, the profit loss. I mean, it's more, the intent is to give the readers details because again, we're talking big numbers here. And but again, it just describes the first footnote just describes the cash and how much you have in there, and also what it's invested in, and if there's any restrictions, if there's any about VHI policies. So, and again, the whole purpose of any audit is to give the reader as much information as we can about VHI and about VHI's policies related to cash. Then it talks about receivables. Who owes you the receivables? If there's other disclosures here. Again, we talk about cash and investments there. Prepaid expenses, it tells about what's out there for prepaids. Unearned revenue, also called deferred revenue, just tells the reader, okay, hey, what is out there is prepaid July premiums for health and dental premiums. Claims payable, same thing, and the claims to be paid, it tells how the numbers were derived, who is owed, and like claims to be paid describes the fact that it's actuarial based on trends and analysis by the actuary. So, and really just, and then it gets a little bit more detail on the profit loss about the reinsurance, what you pay for, what the coverage is, your assessments, again, at the mandated assessments, who assesses them, and kind of how they're calculated. And then a few other disclosures at the end is describing the general administration expenses and the relationship with VHI and with the VNEA, those types of general administrative expenses, and also just how there's affiliations between the two organizations. So, and then on page 20, just the last footnote, we really talk about the subsequent event footnote. And again, this is all about giving the readers useful information. Is that we talked about Visters and the fact that part of their membership is leaving, and we try to disclose what the effect is going to be on the VHI's financial statements. So that, and again, because with an audit, a reader, if they want to try to make a opinion about your financial security, they want to know all the facts. And then that's really what we're trying to do, is just describing, okay, hey, by the way, subsequent to year end, we know that our revenue is going to shrink $22 million because Visters is leaving in January. So it just kind of describes that. So a few more pages 22 and page 23. These are just required tables that GASB, the Governmental Accounting Standards Board, because you are an insurance company, they require these tables specifically related to your program. So again, it's just more information. The first one, it's a 10-year table that we have to show. So every year we have to lop off it. We have to lop off a year. We add a year. And then table 2 kind of breaks down health and dental. It kind of breaks it down into, okay, how much did you pay? How much did you incur? Again, required tables by GASB. The last 2 pages in the back, it really just were the front part was the balance sheet and the profit and loss that we talked about, but it was consolidated. It was VHI as a total. Here, schedules 1 and 2, it kind of breaks down VHI into the 2 segments: health on the left, dental on the right, so that you can kind of pinpoint, okay, how did each entity do? I mean, or financially speaking. So earlier I talked about the fund balance being about a little shy of $45,000. or net position, if you will. But this is just showing that, okay, it's really broken down to about 37 million for health and $8 million for dental. And again, it breaks it down into the weeds a little bit. And turning the last page is really the profit and loss of VHI by program. And you'll see, as I mentioned earlier, you made just about $600,000 last year, but breaking this down, health actually made a little bit, just about $1 million, but dental lost 400,000 to get to our 6. And again, it makes sense. Dental went a whole month without billing. So it really comes back to, so that's really just describes the in-depth items of the health and dental program. So that is, again, I know I might have ran through that fast. I didn't want to bore you too much with the big details. I'm happy to slow it down. I'm happy to do in-depth more if you want to, if you want me to. But is there any specific questions you guys have? I'm sure Chris has answered any questions you might have already. So she knows these numbers by the back of her hand. So.
Chad, I wonder, you go over this every year, but could you speak to the practices that are in place to make sure that the audit process has fresh eyes and just doesn't get too comfortable?
Sure. No, absolutely. Good question, Tracy. So I forget, Chris would say this, 4 years ago, we actually we kind of instituted basically a rotation of partners at our office. So there's 3 audit partners at our office, myself, Rick Brigham, and Fred Duplessis. And we all actually touch the audit. I mean, I can actually show you my routing sheet here where I'm signing off, I got Fred sign off, I got Rick sign off, and we all do different facets of the audit. But that's as partners. But we also, we obviously don't do all the work. We have staff. So we try to rotate it around. I mean, this year, one of our staff members is actually in North Carolina. He's been down there for, again, pandemic related, for 1.5 years now, Andy. But so he's working on it down there. We actually did bring up Rick was actually working on it a little bit with 2 of the staff members, and I had 2 staff members at our office. So we got a huge mix. So I don't want to say there's not a monopoly at all within our office, because all 3 partners touch the audit with the applicable staff. So Rick is more of a reviewing partner on this particular job. Rick is more of a work paper reviewing partner. I am the field work partner in charge, and Fred is basically our overall reviewer partner. Fred reviews every single audit that goes in and out of our office, and it's going to work kind of the same thing for VSBIT actually. But thing is, we all have different roles with VSBIT. Rick and I kind of switch roles. We try to keep the same staff on the same jobs just because of the familiarity. So I mean, if I have Dylan, I think I can't remember Dylan, but no, Faith went. So if Faith went on VSBIT, I'm having her on VHI because all of the controls are the same for the 2 organizations pretty much. So that's what I mean. We definitely don't get comfortable because we definitely are shifting around, and we're finding that with not just your audit, but with all audits, because people, even though I've been to so many places, I have a lot of institutional knowledge. I mean, it's good to shake it up, because Rick sees things like, for instance, today I worked in the town of Hardwick, and I saw something that I called Rick on and said, hey, this just makes sense. Did you see this last year? So we do that. We just kind of feed off each other, and so that's kind of what we're doing with a lot of audits now. It's just kind of rotating around. So
thank you. Anybody else have questions?
So one last thing I'll just talk about, and I guess the other document that you got was the management letter, and you're saying, Chad, it's the same letter you gave us last year. You just changed the dates on it, and there are a few different words in there, because a lot of it comes from our guides, but unfortunately, it is virtually the same. We found no internal control issues. We've gone over. I mean, we did talk a lot about. I mean, this year, things have changed with the pandemic. I know Chris is working from home. There's a lot of electronic signatures, a lot of electronic approvals. I mean, we had to, and we saw this last year at the tail end too, but just getting our head wrapped around, okay, how does this work? How does this work? And understand. But we did not, again, we did not have any journal entries. We did not find any internal control issues that we thought were that needed to be mentioned. I mean, the answer is Chris does a great job. The entity is solid. It's, I like to say, like, there's a lot of jobs I go to where we always ask the questions like, what do you give the board on a monthly basis or a monthly, quarterly basis? And they say, oh, I give them this. And I have to kind of cringe thinking, oh my God, the board's not getting accurate data on a monthly basis, but that's just not the case here. I can see it, I can tell. So you guys got some good information there. You got some good processes. You get good staff. It's all working. So.
Mhm.
Yeah, can you? And this is one of those things where I'm always uncomfortable when I don't have questions about the audit. Makes me uncomfortable.
Oh, let it fly.
You know. So in that letter in that second paragraph, that's like the same letter all the time.
On the management letter, Zach, or
I think it's the management letter where we're talking about, like, here's the sentence. I'll give you the sentence, and I'm hoping that you can help me better understand the sentence.
Sure.
Which is, accordingly, we do not express an opinion on the effectiveness of VHI's internal control. So
Yes.
can you talk me through that? Like, you're saying there's no problems with the internal controls, but talk me through that sentence so I understand.
Okay. Yep. No. So we evaluate the internal controls so that we can determine our risk related to VHI and their processes. We have not done there are such things as an internal control audit. What we do is we document the understanding. We see if we test them. We test the internal controls because we want to know if they're working. We do a walkthrough of every single process. But for instance, if I said to you that internal controls are perfect, which means that things can't be broken, I just could never say that because internal controls can break down. So what we're saying is we didn't audit the internal control. We can't give an opinion on the internal controls, but it's more of a, hey, we've reviewed them, we've tested them, they're working, they're adequate, and there's no reason to change them. But as far as giving, like right now, I can bless these numbers because I have substantial evidence that says I have a bank statement that says X, an investment statement that says X. I don't know whether or not an internal control might have been broken during the year. I didn't test it, I didn't find it, but I can't validate that. So
Okay, I gotcha. Thank you.
And just to add, also, that's normal in a financial audit. An internal controls audit is a whole separate beast. And it's either a SAS 70, a Social 1, they're totally different audit. So that would be normal for a financial audit, that they wouldn't be expressing opinion on internal controls just because of the scope.
No, and I assume that, and that's more me trying to understand what this is and what it is not. So Chris, when's the last time, when or how often do nonprofits do an internal control audit? And if so, when's the last time that was done?
So in my experience, I don't know exactly statistically throughout the country, but in my experience, it seems like the internal controls audits are always prompted by someone that you work with wanting you to prove it.
Okay.
So for example, when I first started with VHI 20 years ago, Blue Cross Blue Shield didn't even do an internal controls audit. They had not to that level. They had internal audits. There were other procedures in place, obviously, but they didn't go to the extent of having a Social 1 audit done. They're expensive. Then when the exchange started, there was pressure, and actually Fred Duplessis from Sullivan & Powers, he and I had gone to Blue Cross a couple of times to put a little pressure on that, because we do rely on Blue Cross a lot for a claims paying operation, and that controls a lot of our money up there. So we had asked for it, and we found, Fred and their team were able to find other ways to validate the data. And then the state started putting pressure on Blue Cross as well. When they wanted to go out to bid on the exchange, the state basically required an internal controls audit. So at that point, Blue Cross decided that it was in their best interest to pay for that, to be able to continue. It's a little bit more course of business now for some entities, large insurers, things like that. So, on the nonprofit side, unless you're a service provider, usually you want a SOCH from your service providers. So as a normal course of business, I would assume that probably a lot of them don't in smaller nonprofits, but I don't know if Chad, you have anything to add to that.
No, I mean, very few, I don't actually, we have never done an internal control audit per se. We have done evaluations of if there were some problems, we would do a evaluation of a certain process as a separate engagement, but very, very infrequent. One thing that Chris mentioned is that what's called the SAS 70 report, which is, and just getting, so in internal controls, they come in and they don't even look at a number. It's just all about process. And now, because Blue Cross does get the SAS 70 report, right, Chris?
Yes.
Okay, so basically, Blue Cross hires an agency to come in and spend days and weeks and months basically auditing how they do their processes, so that, and then they give an opinion on their processes. But what that does is it allows VHI the comfort level to say, hey, Blue Cross's processes are good. We can trust that, hey, when they send us a bill for claims, it's accurate. And that's what it's all about. It's your assurance that, because you're not up there approving doctors' bills and stuff like that, and you just don't know. So this is the assurance that you get. Conversely, VSBIT, related organization, gets it from their service provider that does their claims. Again, they want to know that they get that group knows what they're doing. So and it's been tested. So
Thanks, guys. Appreciate it.
Anything else? I'm happy. And as I've always said, after this call, if you wake up in the middle of the night with some serious emergency accounting question, I want you to call me, email me. I don't want you guys not to sleep because of this stuff. So.
Well, I would just.
What if we just have trouble sleeping and want to talk to somebody?
That will work. That will work. That I can put you to sleep. I can put you to sleep. Actually, quite honestly, just a quick joke today. My son and his mother and I were having a quick texting conversation, and next thing I know, it led to some accounting terms back and forth. My son dropped out of that conversation so quick. It was, so I was like, okay, that's one way to get him out of the conversation. He didn't want anything to do with that. So.
Well, like to commend Chris again for excellent accounting and financial management. And thank you, Chad, for a thoughtful and thorough explanation of the current financial statement or status of the organization. We appreciate that.
Perfect. All right. Again, if anyone has questions, please reach out to myself or Rick or Fred. So.
Thank you so much.
All right, thank you guys.
Chris, would you like us to take action, or Jonathan to accept the audit? I would welcome a motion to do that. Joel moved that we accept the audit. Is there a second? I saw Zach first. Is there any discussion? Seeing none, all those in favor, please say aye or raise your hand. Yay, Gio, thank you. Opposed? Abstentions, thank you. We have approved the audit. All right, and now we will move on to the health rate filing. Who is gonna take the lead on that one?
All right, bye, guys.
Bye-bye, thank you.
Bobby Joe, you want to take that?
Yes. I will share my screen if you'd like. So we're all looking at the same thing. So I apologize that we just got it to you today, the memo. As I mentioned in the email, it is confidential, that we don't release this information until it's been filed, and then we don't have a choice. It's out there at that point. We were pleased to see that the rate filing came in, or the initial assessment from Blue Cross came in. It came in at 6.6 from what they gave us last year, pro forma to pro forma. So what they thought we needed last year versus what they think we need this year was 6.6. Last year, we did add in some contingency margin because we were concerned about a lot of the different things and factors that we had going on, which means that our actual build to pro forma increase is 1.3. So we've been waiting for that for a while. So we were happy to see that. But with so much uncertainty that's out there right now, we still think it's prudent to put in a request to have a 5% increase across the board. It's an overall increase of 5%. That ranges in the plan designs from 2.8% to 5.2 at the highest. The 5.2 is at the gold CDHP, which is where the vast majority of our membership is. But I think suffice to say that folks will be happy to see a 5% increase after years of double-digit increases, trying to get these rates straightened out. Some of the things that kind of stood out to us, so as we noted in the memo, Blue Cross had actually taken out 4.6%, excuse me while I kind of scoot down to this chart. They're removing direct COVID claims and adjusting for returning care. So they're saying by the time FY23 comes along, we should be past COVID, we should be past any returning to care rebounds in services. We're a little feeling like we'd like to be a little conservative there. The other thing is Blue Cross has done 2 very detailed COVID analysis to look at what the impact has been, but their most recent one was in June. And if you look at the chart of cases in Vermont, this was June, and we were headed toward 80% vaccination rate. Our numbers were down so low, and then the Delta variant hit and things have just escalated. So we just would like to have some contingency margin in there to make sure that in case all of a sudden things go way up for FY22 and then again into FY23, we think there's going to be booster vaccinations coming through as well. And while the government has paid for most of that, we do pay for the administration of it, which ranges somewhere in the $25 to $50 range per shot. So we have a number of things that we're just a little bit concerned about, which is why we felt like we needed to add that continued margin in there as well. Let's see if there's anything that I'm missing.
I was gonna say, we also talked about if we went the other way and went out with something that was too low and then the COVID numbers were wrong, then we're going to go out with a lower rate increase for the members and then have to go to a really large increase next year to make up for it. And members don't want to see, highs and lows. They want stability.
Yeah, so this 4.6 that they would be removing, and also we had a couple of other adjustments. So the first one is an update to members. We actually, I think, there's been this shift in retiring. We've had some early retirees, which has helped our retiree pool become younger, and it's actually helped our actives pool become younger as well, because some of the older age members are now retiring early. So they did adjust our numbers 1.3 for that, 4.6 for removing the COVID, and then another 0.7 because of some of the membership shift with the plan designs. I believe that has mostly to do with folks moving from platinum, gold, and gold CDHP to the silver plan. That's the only plan that allows an HSA at this point. So we did have a shift to the silver plan this year. So there's a lot of numbers in there that are bringing the numbers down, but you have to keep in mind these higher numbers, the trend assumptions. There's an adjustment of an additional 2%, and then trending out another 7.7%. So these are some big numbers that we can probably expect to see again next year. So I think this year, by way of being able to add this additional margin in, again, if the stars all align and things continue to go well with the market and go well with claims, we could, benefit from that little bit of an increase this year. That way we're not trying to make up any ground next year when we're facing more on the lines of a 7%. Mark, is there anything that you wanted to add or that I missed?
I think your explanation was thorough. I would just add, and you see this in the footnote on page 1, the Green Mountain Care Board didn't do us any favors with its hospital budget renewals this year. And of that 6.1 pro forma rate from the blues, 4.7 of it is just unit cost price increases, medical inflation, and the hospital budgets are the major factor in that regard, along with RX pharmaceuticals. Those are always the two areas where we see the most inflationary trend in terms of what is being charged. And Blue Cross is anticipating that the hospitals may see another significant budget increase next year, which is also part of our thinking around that 5%.
Zach?
Typically on the Green Mountain Care Board, what part of the year are those decisions made? When does that usually occur?
Generally, if I recall, and Bobby, Joe, and John, correct me if I'm wrong, I think they make their decision around September or October.
Yeah.
And those new rates go into effect at the calendar year turn.
Okay, great, thank you.
And to be honest, Zach, that was part of the reason that we moved our rate filing back. We used to file earlier in September, but then we'd be waiting to see about these hospital contracts. So moving to the end of October allowed us to see what the hospital increases would be before we implemented them, because some of them have a direct line to the increase that we see with our rates.
The University of Vermont Health Network, which is the most important and consolidated medical institution in Vermont, got a 6% budget increase from the Green Mountain Care Board. And we asked at our actuarial memorandum meeting what the impact on our pro forma rate would have been if that had been lower. And I think it was Matt on the actuarial team at Blue Cross that said, well, if they'd gotten a 3.5%, your pro forma rate would have dropped by 1%. That's how significant those budget increases are to us.
Thanks for that additional information, Mark.
So Bobby Joe, do you want a motion on this, or do you want a motion on all of the recommendations at once? Because there is a different recommendation for visitors. Want to take them one at a time? And my recollection was we used to decide how much reserves we were going to apply. We didn't exactly act on the rate. Tell me what you need.
So we have written up some suggested motions for you.
Oh, lovely.
So let me just talk about the visitors real quick, and then we can kind of capture all of the health at the same time.
Perfect.
So this is on the last page. As you recall from conversations, the 7,600 members are moving to VBA, the Vermont Blue Advantage, Medicare Advantage plans outside of VHI for January 1st. This has an overall impact on our net position, as well as our admin as well. We are, as Chad noted, we are keeping them on for wellness and for administrative services, at least for the time being. We hope that continues, but that's always up for negotiation. The Visters pre-Medicare population, which is 850 lives, is remaining with us. Their build to pro forma rate increase is 34.6%. This group we've been challenged to try to bring them up to the correct rate for a number of years. You may recall this group used to be in the same population as the actives, but when the actives moved to their own benefit plans, it left these under 65 pre-Medicare population to be rated on their own. And they were then found to be sorely underrated. So the Visters trustees have agreed to a 17% increase to the build rates. Those are the rates that the members will face, and Visters will pay the difference in a monthly administrative fee. So the VHI management team is not requesting the use of any reserves for either the actives or the retirees. The retirees should be flat. There's no use of reserves or expected increase to our reserves for them. Again, Mark or John, did I miss anything or misstate anything?
I think you got it.
Yeah, you got it.
One other quick note is this is a 6-month rate. So part of the change that they were making is they're changing to a calendar year to try to line up with the Medicare Advantage has to be a calendar year. So this is a 6-month rating cycle from July of 22 through December of 22. So next spring, we'll be bringing you a new rate review renewal to look at for January 23.
Bobby, Joe, refresh my memory. We're going to begin that process for the calendar year 23 in around April or so?
That's correct. Yep. So we will not be bringing you the retirees and the actives at the same time anymore. So let me just bring up what we have for language, Tracy, and see if this works. And of course, you can adjust it however you feel it should be adjusted. So I don't know if this is in one fell swoop or.
Let's take them one at a time. The first thing that we need to attend to is move the FY23 premium rates for active school employees. I can no longer see you, so if you could unmute and speak up to make motion number 1, that would be terrific.
I make a motion that we accept the health rate setting based on
Thank
the
you.
23 rates.
Thank you. Lisa has moved the FY23 premium rates with the proposed language. Is there a second?
Second.
Zach has seconded that. Is there any further discussion? Hearing none, all in favor, please say aye.
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 Opposed? Abstentions? Thank you. Gio, we got your vote too. And thank you, VHI team, for allowing all of the stars to align in a pretty good place this year.
No double digits, baby. Budget
Yeah.
season got a little bit easier.
Yay.
We were
That's
pretty
probably the
happy with
only
it.
thing.
Yeah.
All right, we also need to file the rates for the Visitors plans as recommended by the trust administrators. Is there a motion for that?
I move to file the rates for the Visitors plans. The rates to be filed will have no impact on the active plans nor any intended impact on net position.
Thank you, Zach. Is there a second?
Second.
Thank you. Was that Peggy or Lisa?
Yep.
Peggy. All
Peggy.
right. Perfect. Any discussion? Hearing none, all those in favor, please say aye.
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 You have approved that motion, or I should say, all those
Okay.
opposed say nay. Abstentions. All right, now you've approved it.
Tracy?
And yes, sir.
I support it, but I do have a question about the paragraph regarding the difference between Blue Cross's rate increase and the Visitors trustees approval rate, and the meaning of the final clause that Visitors will pay us a contracted sum to cover our expenses that represents the difference between the figures above. The difference is 17.6%. And are they paying us the rate difference?
We've, I'm sorry, Bobby, Joe, I didn't mean to step on your toes.
Go ahead, Mark.
Well, correct me if I misspeak. So they've agreed to pay us an administrative charge per month per member. The pro forma rate from Blue Cross Blue Shield of Vermont, and we've seen this now for years for the under 65 population, is substantially higher than what they actually bill for, even though 17% is a steep increase. And it's the second year in a row this population has been hit with 17%. So for the person getting the billed rate, who's an enrollee, 17% is not very comforting. However, it's a lot less than 34% for the trustees at Visters. So so Visters is essentially subsidizing, although nobody likes to use that word, they're essentially subsidizing that population and covering that distance between the 17% that they collect from the billed rates and the 34+% that they should be charging according to the actual.
So does that mean that Visters is actually footing a bill that it wouldn't have to if it had gone along with an outsized 34% increase?
If they paid the 34% straight out, if they charge the enrollees 34%,
right,
then the enrollees would have carried obviously the lion's share of the claims going forward, and Visters would not have seen that subsidization dynamic.
Okay, I get it now. Okay, that's great. Thanks.
Remember, they always did subsidize in a way through.
I know. Yeah, I know.
Years ago, the Department of Financial Regulation finally said we really need to break these groups out for purposes of actuarial analysis and figure out what that subsidization dynamic really amounts to cost-wise. And you need to make that very clear to us in future rate filings.
Right.
And
okay.
We don't refer to it formally as subsidization. We just refer to it as an administrative fee that covers the distance between pro forma and billed.
Yeah, why use 3 words when you can use 10 or 12?
Well, so and what's the rationale, and why do people, right? Because I mean, it is basically a subsidized cost. So why the desire to say they're paying an administrative fee that just so happens to.
Bobby, Joe and John may have more insight to me. I think the word subsidization just doesn't sit well in the regulatory world. Bobby, Joe, what do you think?
Yeah, I think that's part of it. And, you know, the fact is they have not wanted to hit this group of employees with these huge increases. So they've tried to, you know, kind of build a stairway to get them there. They just haven't got there yet. Some years this stairway probably should have been steeper and it wasn't. So now we've had a couple of high increases, but eventually the plan is to get them to that 34% to be paying what they should without having rate shock for members.
Yeah, Bobby Joe's analogy of the stairwell is a good one. I think everyone's under the understanding, certainly DFR, is that at some point in the future, the gap between those numbers will either no longer exist or be markedly less than it is today. And how we get there and when is another question.
And the folks who are paying it are only paying it for a set amount of years from the time they retire early until 65, because then they're out of it.
Right.
So it doesn't hit the same people every year. It's a subset of the same people every year.
Under 65.
And to add to the language, I mean, in the past, they really were subsidizing. They have changed it because what was happening is that the retiree, the Medicare population was paying more than they should have been. And the other ones were not paying enough. So one group was subsidizing the other. Now with Medicare Advantage, that pool, that population isn't part of the pool. They can't subsidize from one pot to the other anymore. So now they have to really pay it to us as a fee.
The only thing I'd like to say is that the early part of this retirement is really just with regards to Medicare, because these people who retired with full benefits, having taught X number of years.
Yeah. However, the rates are more expensive because Medicare is not involved. So
definitely. It's just the early part, I think, is a little.
Yeah. They're certainly just as deserving.
They paid their dues. Yeah.
That was my only point.
No, you're right. The word early really shouldn't come into play here. The dividing line is either you're eligible for Medicare or you're not. There's really no early or late. That's a good.
Yeah, that's true. That's good.
Yeah.
Okay.
All right. We need a motion to authorize the chair to sign the documents and authorize Bobby Joe to file the health rates with DFR on behalf of VHI. Let's do this one all in one fell swoop. Could we have a motion to that effect?
I move to authorize the board chair to sign the rate filing documents and to authorize Bobby Joe to file the health rates with DFR on behalf of VHI.
Thank you. Zach has moved it and I saw Lisa seconded.
Okay.
Is there any discussion? Hearing none, all in favor, please signify with an aye.
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 Gio's an aye, thank you. All those opposed? And any abstentions? Thank you so much. I think this is the best rate filing we've had in quite some time. All right, should we look at dental?
So dental continues to be, a great plan for us. With the rates continue to be really good. We have had rate holds for the past 4 years, and the 3 years prior to that, we had some rate holds and actual rate decreases. But this year, when we were looking at the kind of pro forma of the dental, while we're still trying to buy down our reserves because we do have very strong reserves in dental, and we continue to try to chip away, but the market is working against us, which is good, except that we're trying to lose reserves. So when we looked at it again this year, while we still want to buy down our reserves, we want to try to have a little bit of a shift in some of the rates so that folks that have been looking at 12, 15, 20% needed increases get brought up a little bit to where they should be. So we looked at it with our actuary and we talked about doing a zero minimum. So, nobody gets a decrease, but the best would be a rate hold. For folks that had somewhere between 5 and 11.9%, they would have a 2% increase. And anybody that's looking at an increase of 12% or higher, they would have a 4% increase. We felt like this gives us, we're using some of our reserves. We're kind of resetting it a little bit where people who continue to have good experience every year can still have that rate hold. Those that have been kind of teetering toward higher double digits or into the double digits are receiving just a 2%. And then those that are in the higher double digits from 12 up would receive a 4%. So this would have us still using, about $687,000 out of our reserves if this all goes according to plan. But we feel like it puts things, kind of resets things a little bit and puts people more where they should be. These rates do get looked at on an annual basis, so they look at a year for their claims experience. And Chris did mention, let's not just look at 1 year. Let's look at how has it been. So we did do a 4-year analysis to try and just kind of average it out. If somebody needed a 12 this year, but needed a 3 last year, we wanted to make sure we were being fair. So we did apply this on a 4-year basis. And that's again, based on 4 years of rate holds. And it stood true. Pretty much anyone that was in that higher bracket stayed that needed that 4% increase. And again, we feel like this is palatable for folks. This is a small increase. They haven't had an increase in 7 years. So we feel like a 4% increase for those who are running high is not too much to ask, but kind of resets things a little bit.
Yeah, we don't want to be in like the visitor situation where one group is subsidizing other groups. We want to, and they get out of whack. We want to make sure that, everything's kind of compressed to right where it should be. This helps.
The last thing that's noted in this is we do, when at the beginning of prior to COVID, we were starting an analysis to look at, we have quite a flavor of dental plans. We offer 5 dental plans as our standard plans, but anyone that comes to us can bring their own dental plan with us, which means we have dozens of different dental plans out there. So we are looking at condensing that, making them a little bit more consistent instead of having average it, because these plans all have annual maximums. So where Blue Cross has annual out-of-pocket maximums for members, and if they go over that, they get 100%. These plans are the opposite. You only get so many dollars in a calendar year. It might be $500, it might be $2,000. So we want to look at that and say, let's try to make this a little bit more consistent. And that would, hopefully buy down some of the reserve dollars as well. So we started looking at this prior to COVID, and then COVID hit and we set it on the back burner, but it needs to be brought back to the front. So any questions or comments, Mark, anything that I missed?
Not hearing any. We need a motion to,
Ta-da.
ta-da.
I think you can do this in two.
Yeah. So a motion to file the FY23 dental rates as determined for VHI by the actuary in a range of 0 to 4% dependent on each group's prior year experience, and uses $687,732 from dental reserves. Is there someone willing to make that motion?
So moved.
It's been moved. Is there a second? Lisa seconded. Is there any discussion? Hearing none, all those in favor, please say aye.
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 And Gio says aye as well. All those opposed? And abstentions. Thank you. You have approved the dental rates. And we need a motion to authorize the board chair to sign the documents and Bobby Joe to file the dental rates with the DFR on behalf of VHI. Is there someone willing to make that motion?
So moved.
Zach moved. Is there a second? Lisa seconds. Oh, there. Now I have a few more of you. Any discussion? Hearing none, all in favor, please say aye.
Aye.
Opposed? Yep, opposed and abstentions. Thank you. You have approved the dental rates and the filing. The last item of business is any future agenda items and also a date for next meeting.
So just a reminder that we have the VHI annual meeting, which will be on Friday, November 5th. It was going to be live and in person and with a Zoom option, and now it's just going to be the Zoom option because that conference has been canceled. So it's 8:15 a.m. on a Friday, hopefully over by 8:30. And I was talking to Lisa yesterday at the office. The proxies are coming in. So I think we're in good shape.
Okay. And so we'll need a next meeting after that at some point, and is the best way to go forward with scheduling that to have Lisa do a all call when we have a sense of when we need to next tackle another significant task.
Yeah, we can look at the work calendar. And Bobby Joe, when does VHI normally meet? Is it December or is it not until next year?
All right, let me look. Don't have it.
it's often based, as Tracy alluded to, on projects or initiatives that we need to talk about.
I mean, I think last year Vistas kind of added another layer
Yeah.
and required some extra meetings.
We spent a lot of time talking about Vistas.
So, well, we'll look at it and be cognizant of your time and figure out what's coming up next and then try and get a date on the calendar.
Sounds great. Is there anyone else who has anything on future agenda items or meeting dates?
I was just wondering when the post low rate setting cocktail hours. That,
That's next time we meet in person, Zach.
amen. Amen to that.
You know, you can celebrate too soon, Zach.
Well, I'm going to have a beer anyway.
Whatever works.
All right, there being no further business for this evening, we can adjourn at 5:38 p.m. Thank you all.
Thank you.
Thanks, everyone.
Everybody.
Thank you, everybody.
Take care.
Bye-bye.
Bye.